Hi friends, Lee Brinkey here, and today we're talking about should you wait to purchase a home till rates come down? And a lot of folks out there right now are telling me they're waiting for rates to come down, trying to time the market. But today in this video, I brought on my good friend Brent Starts, and we're going to break down to you the pros and cons of waiting to purchase a home, waiting for prices to drop, waiting for interest rates to drop, and what that could cost you or what could that save you. So with that being said, let's bring on our good friend, Brent Starts. Hi, Brent. Thanks for joining me today. I really appreciate it again. And, I know this is a big subject for you. You've been talking to a lot of people about it. We've been going through this with a lot of buyers right now on should they purchase now or wait till rates drop? And are prices going to come down anymore? Because we've seen, obviously, prices starting to come down some with all of this inventory. And we're also seeing sellers willing to do credits. They're also more willing to negotiate because we are in a buyer's market, especially here in South Florida, because we're back to the same inventory that we were in pre-COVID. So with all that said, again, thanks for coming on.
Sure. It's great to be here, Lee. Thanks for having me. And what a timely topic today. It's we're having this conversation daily, and it's something that people need to consider. So we want to go through the facts and really point out what's really going on and why, and to the best degree possible, anticipate what's going to come in 2025.
Right. First of all, let's take a look at after inventory projections for 2025, because if you look at the 2025 projections from Housing Wire, you'll see that they're expecting inventory to continue to rise. And then around September, October, November, start to fall off and inventory start to get sucked off the market, because obviously they're thinking that rates are going to start coming down more and more as we move through 2025. But let's say that doesn't happen, right?
Mm-hmm.
And it's 2026 before we see rates come down. Tell us why you believe waiting to purchase a home is a bad idea, especially if right now you're in a position you can buy and you're just trying to time the market, because we've seen this happen over and over again. We'll go into some of those in a minute. But why do you think this is a bad idea?
Well, I'll tell you what, Lee, it's a great question. And what's happened as far as interest rates, and just very briefly, rates topped out right in the high sevens, almost 8%. And then we're hovering in the high sixes right now. So a large drop already took place in anticipation of the Fed's cutting rates. And the December 18th meeting, that's where we saw the last 0.25% cut. However, they always survey every so often they survey the Fed governors, and the consensus is there's only going to be 0.25 cuts, a total of 0.5% or 0.5% in all of 2025, shocking the markets. And that's why we saw the stock market take a hit, because they were anticipating further cuts. And now they're saying, hey, this inflation's a little sticky, and we don't think we're going to have the rate cuts we thought we had. It's going to be a slower, more gradual process. And so when you start trading off, hey, where are prices going to be a year from now versus waiting to get that other 0.5% in rate cuts, how's that going to translate when it's already baked in pretty much to the mortgage rates we're seeing today? So it's going to be it'll be a gradual ride down. It'll be a choppy ride down. They are coming down. However, we're not going to see this radical reduction. I think a lot of people are waiting for that 3% rate again. That's if that happens, we've got bigger problems, because that means severe economic issues are in play. So I think, we've seen the major reduction in interest rates. And so we're going to look at some figures and kind of go through what that looks like to wait versus jumping on something now.
Right. And let's talk about that, because, rates dropped a few months ago and they were down in the, actually in the high fives, right?
Right. The
And
high five.
Right. And you did a bunch of refis really quickly right there. So,
Right.
If someone would have purchased their home before that, they would have been able to take advantage of those refi options that were available then, because you brought some people from the 7 and 8s down to, into the high fives, which saved them a tremendous amount of money.
Right.
So if they were sitting back trying to time the market before then, they probably wouldn't have bought, because we were still hearing people saying, well, we just want to wait a little longer for rates to come down. And and then they ended up going back up. So, and explain to people why that's happening right now, because that's a big treasury situation.
It is. And so what happens is they're looking at the inflation data. And so was inflation, kind of was hanging on there. We had a few reports where inflation looked like it was probably leveling out. And certainly inflation is still going up. Like, people need to understand this. Inflation is still going up. And so, and not going up, there's still inflation. There's not disinflation. In other words, the economy is not deflating. In other words, prices aren't dropping faster, dropping from where they were a month ago. They're still going up, but not at the accelerated rate. We're up, some people think that it was well over 10% actually in real figures when you look at real grocery prices and things like that, oil, that type of thing. And so in gas prices. However, that we still have inflation, and right now we got the read at 2.8% year over year. That's still more inflation than what the Fed wants to see, and that's why they're saying, "Hey, we're gonna keep fighting inflation because we want to see it get down to that target of 2.0%." And so we're not there yet. And some of the higher figures are dropping off. Like, if you go back and look at the month over month inflation figures, the largest months have fallen off. So for us to get down to 2%, we've got to have, multiple months where we're growing less than 0.1% or 1.2% annually. And so it's really going to be a longer fight, and it's going to take some time. And there's other things in play as well. There's going to be a situation where, as administration changes and we start spending less money as a government, that apparently is, as far as the budget they're trying to pass through right now, looking at spending less money. I mean, $183 billion in a 1 week auction, $183 billion of treasury debt in 1 week. To give you some idea, that's 183,000 million. And again, in other words, $1 million, 183,000 times. That's one week. And so as we start cutting expenditures, and that's the plan, certainly in the next 4 years, that's with the House, the Senate, and the executive branch all, saying the same, singing from the same sheet of music, if you will.
If they actually do it, right?
If they actually do it, right. That's a great point, Lee.
They just spent more money. They just raised the debt ceiling again. So keep the government going.
Exactly. But I think there's going to be more transparency. That's my hope and prayer that we see.
Elon saying, right. Yeah.
Exactly. That's, and if they do those things economically, not politically, just math. If we spend less than we make, what that'll do is reduce the deficit, it'll lower our interest costs, and we won't have to raise interest rates. We compete with the treasuries, right? Mortgage debt competes with treasury debt as far as, investors' money coming towards that investment. So we have to raise interest rates to attract investors off the fence to fund your mortgage. That's how it works. And until it's attractive, they won't come off the fence and fund your mortgage. And
so we have to, the debt has to come down for us to see rates come down. And that's what folks need to understand. If the debt has caught up with us and it has to come down. Let's go through this. So let's talk about the last 40 years and look at this graph, because this is the last 40 years of home prices since and you can see that home prices traditionally continue to go up. If you're looking at this graph, there are times when, like 2008, when home prices dropped dramatically, we had the huge crash. But if you held your home through 2008, look what the graph's showing you. You actually ended up with more equity now than you lost. So yes, the market collapsed, but with that being said, home prices continue to go up. And with inventory the way it is right now, and folks are seeing a lot of inventory in the market, and they're like, oh, we got all this inventory, it's going to crash. Builders are still building homes. So builders would actually stop building homes if they thought there was enough inventory, but they're continuing to build homes. And if they're continuing to build homes, that's because they believe eventually they're going to be able to sell these homes. So they're trying to have move-in ready homes. So that's one of the things that folks need to understand, is that over time, no matter what happens, the market goes up, the market goes down. Long term, your value of your home, real estate, is always going to end up for you.
Right. Right. The 2008 is the one-off, right? That was where there were a tremendous number of bad loans out there and that's what caused that crash, because there were loans being made. Lee, I can tell you, sitting on the front lines watching it happen. Stated income, stated assets. I don't care if you don't have credit at all. We'll lend you money,
Right.
100%
It's terrible.
financing.
It was
Terrible
terrible. And
loans.
that's not happening right now. All of
No.
these loans, everybody that's in a loan is in that loan, and they qualified for it. Now, credit card debt's super high. We have seen some foreclosures coming on the market and so forth. But even with that, banks are really working with people. Lenders are working with people and trying to. We have a client right now. She was a year behind in her mortgage, and they worked with her and helped her get caught up. And so they're not wanting to get out here and foreclose right now because they know the same thing we know. This is cyclical and it's going to get better. Let's dive into this inventory thing a little bit more. Right now, I believe purchasing a home, there's no better time. And when I mean that is, we're not sitting here as a realtor and a mortgage broker trying to get you to buy a home so we can make more money. We're doing fine. But with that being said, what we are saying is if you're in a place in your life right now where it's the right time, you're starting a family, you have the down payment, your credit score's there, you can afford to purchase a home, right? It's not going to stretch you out where you're going to be house poor. We don't want that. We've talked people out of it. Brent, I know you have too, of purchasing a home, saying, hey, it might be better just to wait. But if you're in a position right now that this is the right time for you to purchase, you should purchase, right? Because here's the thing. Anyone who's waiting for rates to come down before they purchase, as rates come down, inventory is going to come off of the market, and we're going to end up in the same position we were a couple of years ago, where there's not enough inventory, and that raises home prices. Right. So
100%.
exactly. Right. So right now, because of rates where they are, if you're in that category of folks that can afford to purchase right now, you're going to have way more to choose from. You're going to have way more options for seller credits, for credits from builders. There's a lot of money out there for you to be able to get to help you with your closing costs. And if you're VA, right now, you probably could find a home. I'm not saying probably. I for sure I can find you a home that you can walk into zero down. All your closing costs is paid for, and then you have zero down with your mortgage. So on a VA loan right now, you're in a really great position to purchase a home because there's tons of the ability to get credits. The second thing is if you're waiting for inflation, like this is something that we hear all the time. Well, I'm waiting for inflation to come down. Or inflation's going to keep going up, right? So if inflation keeps going up, what happens to home prices? They keep going up, right? Because they're going to follow inflation. But if inflation goes down, well, that means rates are going to come down. And if rates come down, home prices still go up because there's not enough inventory. So this idea that I'm going to time the market is not working. And over the last since COVID, the beginning of COVID, we've been making videos, and you folks can feel free to go back and watch any of Brent and I's videos. And I have gotten tons and tons of comments. The market's going to crash. You guys are just realtors. You're just trying to sell houses. The market's going to crash. You guys are just realtors and mortgage brokers. You're trying to sell houses. We don't know what we're talking about. But here we are, 4 years later, right? 6 years, literally 6 years later, and there's no crash, right?
Yeah.
There's just more inventory.
A friend of mine, Lee, I'll tell you, and it's not just the last 4 years. You go back 20, 30 years. I mean, I've been around a while, and I can tell you specifically, I had a conversation with a good friend of mine 15 years ago, and he said, I'm not paying $170,000 for a house in Jupiter. And I
Right.
said, they're just going to go up, Matt. I hope he's not watching. I won't use the last name, but he's a good friend of mine, and he still doesn't own a home. And it just breaks my heart, because I don't think you can touch a home in the area he was looking at for anything under 550 right now. And
Right.
rates are higher than they were when we had the first conversation. I said, look at what real estate's done. See, this is the part that people don't understand, and why real estate is so powerful. And if you look at that chart, you'll notice inflation's below the rate of the housing going up in prices. And the reason being the cat's out of the bag. People are starting to know, hey, real estate is a hedge against inflation. Inflation is a natural occurrence. It happens. It's a natural economic event. It always goes up. Prices never really come down. And that's just a built-in, a lot of people try to explain it, but it's been that way for, decades and decades and decades. And it's a hedge against that happening. So you're locking in the price at today's market. And then, no matter what interest rates do, if you just look at any 10-year period, much less 20 or 30-year period, look what pricing was in real estate and go out that far. It's incredible what the difference is between owning versus renting. There's just no comparison. But that's what we're talking about here. If you're trying to time the market, I just would caution anyone that's trying to do that. First of all, there's no crystal ball, but over any period of time, if you look, if you take out the 2008, or even like you mentioned earlier, Lee, if you look at the 2008 specifically, if you bought then at the worst imaginable time, like July of 2007, let's say, like that's kind of like right when it all started, where the market really topped out, and you would be in incredibly great shape right now.
Well, I mean, my house, 20 years ago was in Abacoa, $298,000 for 3,600 square foot under air. That home is worth 1.4 million now. It was able to refinance it 3 times. There's your point right there. And I'm here in Jupiter. The other thing is I hear a lot of is, people are moving out of Florida because of insurance. More people moved to Florida. The numbers just came out. More people moved to Florida than any other state last year. We're the number one state that people are moving to. So that's the other thing. Yes, people are moving out, but more people are moving in. So I hear that all the time, is like, stop moving into the state. Well, unfortunately, that's not going to happen, because we live in a great state. We have these beautiful water out here. People know there's hurricanes, just like there's fires and earthquakes in California, and have been for decades, right? You lived out there, so people still lived in California. A lot of people are never moving out because they love the weather, they love the ocean, they love the mountains, they love the desert. So when a state has things that people want and a lifestyle that they want to live in, they're going to live here no matter what it costs them, if they can afford it, right? So people are going to keep moving to Florida. So, and then, you have these states like North Carolina, South Carolina, Georgia, where folks are moving into those cities and states. And what's happening is the same thing that's happening there. They're getting out of Florida or going up north, and then they're piling into the same cities, and the growth is there too. So it just is what it is. There's more people migrating around the country right now than we've seen in a long time. And they're trying to move the states that benefit them the most. And so that's something that we hear all the time, is I get on the channel, is that stop moving to Florida. They're not going to stop coming here. And
they're not going to stop coming.
And the state's going to keep growing. I mean, here in Jupiter and Gardens, you're pretty much out of land now for new construction, right? Artistry's basically the last one. You got a Devasta community. You have another one that's just really tiny, small community that's about to be built. But the chance you're going to west or you're going north now, if you're trying to stay in Palm Beach County or Jupiter. So let's talk about the home price appreciation forecast for 2025, right? So if you look at this one, you've got Moody analysis at 0.3%, and then you've got Goldman Sachs all the way up at 4.4%. But the average seems to be right around 2.4%. Fannie Mae, Morgan Stanley, MBA, CoreLogic, Zillow, NAR, those are all right around 2.4%, 2% up to, right around 2% up to 2.6%. So the average is 2.6%. But let's take 2.4%. Let's say that Rates stay the same.
Mm-hmm.
This all 2025, they never change.
Right.
But home prices go up 2.4%. What are we
Which is
looking at?
very conservatively, because average is over 4% every year, year in and
Right.
year out. Let's just super conservative. What was it, 2.4% you wanted to look at?
2.4%, and let's say it's a $500,000 home.
Let's do it. Let's take a look at it. $500,000 home. Let's assume 10% down, a loan amount of $450,000 at 6.75%. Your payment's $2,918, principal and interest. And if we look at, assuming a homestead at a 500,000 purchase, and let's use 1.8% taxes, right?
Right.
Because
That's right between Palm Beach County and the Treasure Coast.
kind of picking a middle point as far as the millage there. Yeah. So that your taxes would be $675 plus, let's use $210 for insurance, just straight on down. Okay. That's $3,803 per month would be your payment on a $500,000 home if you did it right now. All right. If you rated 1 year, the $500,000 home just at 2.4% would be $512,000. Your loan amount would be 90% of that figure, so $460,800. The principal and interest would be $2,988. So your payment goes up $70.
That's if you wait. That's if you wait to 2026, right?
Right.
And prices go up another 2.4%. Correct.
That's correct.
So what if you wait to 2027?
27, you're looking at 524 purchase price. I just did 12,000 per year. It'd be slightly higher because it'd be, percentage on, compounded, but just using super conservative figures, 524 is a purchase price. Loan amounts 471,600. You've got a principal and interest payment of 3,058, taxes at 711, and let's just use a flat figure, 210 for the insurance. And we know the insurance could go up, but that'd be 3,978 in 2027. If we popped in another 12 grand, assuming, that same percentage appreciation, 536, your loan amounts 482, 400, that's going to put your payment at 4,068 PITI, so you're seeing that payment go up. And then let's assume that pops down the road, they're anticipating.
The Goldman Sachs is saying 4.4%. So let's say the Trump administration does everything that they say they're going to do. 4 years from now, we have, debt way down. We have interest rates falling, but let's take the same interest rate. Let's stick with the same interest rate. So let's say interest rates are falling and appreciation goes up 4.4%. What are we looking at now?
Now you're looking 559,584 as a purchase price, a loan amount of 503,625. So your PITI, assuming the same rate of tax increase, would be 4,240. So you're looking at well over $400 per month higher payment. Plus, that's big. That's $5,000, almost $5,000 a year. But you're looking at, more importantly, look at the appreciation you lost.
Right, and we've talked about this every year that we've had this YouTube site. So for the last 3.5 years, we've talked about this on camera. We've had clients. I'm waiting till next year because I think the market's going to crash. I'm waiting for rates to go down more. I'm waiting. And those two things have priced people out of the market in many, many cases. So that's what we're trying to say today. And I hope that people understand that we're not here trying to force you into buying or saying, hey, if I don't buy right now, I'm not going to be able to afford a house. That's not the situation. But if you're in a position right now where you can afford to purchase, I don't think there's a better time. Even though rates are up, inventory is also very high right now, especially here in the Treasure Coast and Palm Beach County. And it allows for you to be more picky on the home you're purchasing and also be able to get more help with the closing cost. And I think for a lot of folks right now, especially with credit card debt being so high, the economy being where it is, and prices being so high, having that help right now is a big deal.
Right.
And we saw this before where it's easier to purchase a home when somebody's giving you $10,000 or $12,000 or $15,000 in closing costs. So
a lot of times we can use it for buy downs too, Lee, as far as getting that interest rate lower now too. And then, assuming it's going to be
right. So that's the last thing. But before we leave, let's talk about that interest rate buy downs.
Right.
Talk a little bit on that, because that's a loan that folks can take right now, because if you look at the forecast, they're forecasting that rates are going to be falling over
Right.
the next couple of years. So talk about the buy downs.
Yeah. Let's say, because interest rates based upon several things, FICO score, down payment, those types of things. So let's just assume a 6.75% rate, just to use a number. A 1.0 buy down would be a situation where the seller pays the difference between 5.75 and 6.75. That payment, let's say it's, $4,000 or whatever the difference is, and they would pay that credit would be given to you at closing towards that difference. So you technically have a 5.75% payment, that interest rate payment for the first 12 months. And at that point in time, it would go to the 6.75, or you could refinance if rates drop, so you're getting the benefit in advance. That's one additional way to help with affordability and make that payment more comfortable. You can do a 2-1 buy down. So technically that 6.75% rate could go to 4.75 for the first year, and then 5.75 the second year, and then it would go to 6.75. If you didn't use the whole credit that was given to you at closing, you get that refunded to you when you do refinance, when rates drop. So you don't lose it. It's just a seller concession to help with that payment to get to adjust to the purchase scenario versus renting. So
Right.
it really helps out.
And the great thing about this is that you have to be able to get approved for that 6.75 rate,
Right.
correct?
Right. That's correct. That's correct. But I'll tell you, we're not seeing prices crash, and I just don't see that's going to happen in
It's
the
not going
future.
to happen.
It's
No.
not. I do see
We're yeah. Yeah. Seller credits are happening.
Yeah.
Prices are down a little bit.
Right.
But that's because people are negotiating. And then
Right.
some communities, prices are down because builders are just offering all of these incentives. But once they build out that community, then you're going to see those prices go right back up. So
Right.
there's lots of opportunity right there there's lots of opportunity out there right now. I see it every day. I think that if you're in a position where it's the right time for you, you might want to give Brent a call, sit and talk with him for a little bit, pick his brain, let him run some numbers for you, let him show you what it would look like purchasing a home, and we can help you find that right home. So, Brent, I really appreciate it. Your information is below in the information section below. So if anybody wants to reach out to Brent directly, feel free to. He's a great guy. He's always here to help you and help answer all your questions, right?
Absolutely. Anytime.
All right, great, Brent. Thanks for joining me today, and we'll see you in the next video, man.
Thanks, Lee.
So I hope you liked this video. If you did, give me a thumbs up. I really appreciate it. It lets me know we're making the right kind of content for you folks. Also, if you have any questions or comments, go ahead and leave those in the comment section below. We love to hear from you, and Brent and I will answer any of those questions or comments. And also feel free to reach out to us directly. My information is right there on the screen, and Brent's is down in the information section below. You can reach out to either one of us, and we'll help you and guide you in the right direction. Also, if you have not subscribed, go ahead and slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. Because if you're looking for real estate anywhere in the Treasure Coast or Palm Beach County, I am here to help. Be kind to each other, and we'll see you in the next video.